because the reality is all of this positioning has created the conditions for the next financial crisis. We know, we've been talking about this since June of 2013, we know that liquidity in these markets is not in a good place, all right? So this is the global liquidity tracker, and you can see this bottom is what happened in 2008. So global liquidity dried up, while the stock market continued to rise, so people stayed in it. They thought, well, everything's okay. The markets are going up. That's awesome. But there is a tipping point where the markets then begin to implode. And I believe that we are near or at that tipping point. And just as a reminder, the lack of liquidity means that when a lot of people want to sell their stocks or their bonds or anything at once, no buyers. That's what lack of liquidity means. We've just seen how they have transferred the risk from the private sector, the few, to the public sector. So that's already in place. When this next crisis hits, I personally believe in all the laws and everything is in place to just bam, shut these markets down. You may get a statement that says you've got whatever, $1 million, $100,000, whatever it is, but you will have no access to it. Just like the people in Greece still do not have access to their accounts or full access, I should say, to their accounts at the bank. So part of what we're going to experience is that wealth transfer. And so they've transferred all the risks. Now they're going to finish transferring the wealth. If your money is held in a bank, they're going to bail it in. They're telling you, they're showing you, they're doing it all over the globe. If your money is in the markets, that's the way that they did it in 2008. They will transfer the wealth through crisis then. They did that back in 29 to 33, and they're going to do it again. So the question is, have you protected your wealth? Because they're not protecting your wealth. They're positioning to take it. And they need to have a major global financial crisis in order to justify the transition from an oil debt dollar standard to an AIR SDR standard. And you never let a good crisis go to waste. And in that way, they will have the ability to reposition out of the ashes of the paper fiat system into a one world currency. This is their goal. And I'm going to tell you, they can accomplish it if they can keep enough confidence in the system. I did a webinar a month or so ago on that. So you might want to go take a look at that and see how that's eroding. But if they can maintain that confidence, they will pull it off and they will be in control. And either next month or the following month, but very quickly in here, I will do a webinar on what it's like to live with the IMF as the ruler. There's enough data on that. I can do that really easily. Well, it'll take some time, but I'll do it. Because that's how they're going to reset the system. And, you know, I had somebody this morning say to me, well, you know, if that happens, I'm sorry, but it's already begun. The system died in 2008. Everything is extraordinary policy. And the very foundation of our money system, we are witnessing and experiencing runs. Now, you wouldn't see it unless you're looking at what I'm about to show you, but I'm sure you've heard about how much oil has dropped. Well, oil is really a proxy for the petrodollar. And it's easy enough to manipulate that through derivatives, just like they can manipulate gold and anything else. But this is what a run looks like. So we're already experiencing a run on the petrodollar. And then any of you you might have noticed the run on the treasuries. Here's that one too. So when there's going to be a major shift, they always start with foundational runs. That's why if you look at what's happening in 2016, there has been an escalating war on cash. There's been demonetizations in India, in Venezuela, and a whole bunch of remonetizations, which is simply lopping off zero. It's really similar. Those two things are almost similar because it means the old currency is no longer good, and they're going to give you a new one with a few less zeros. So for a minute, you might feel okay. But that's been heating up in a very pervasive way in 2016. And let us not forget that in October, and we're going to look at this again and what happened on this particular day, but October 1st, 2016, the Chinese yuan was included in that SDR basket. China is spearheading this monetary shift. So what can I tell you? I mean, that's just what's happening. So what we're about to experience is the US dollar losing reserve currency status. And the bottom line of that, and so now you can look at India and you can look at Venezuela and you'll see this. But the bottom line is that the dollar will no longer be accepted in global trade. Now, my personal opinion is that you and I are still going to have dollars, just like we did in January of 1971 and in December of 1971, even though they made that shift. So I was, 17 or something like that when that happened. I knew there was a lot of chaos, but I did not know that the money standard had shifted. This is what we're going to experience, which means that all of those dollars that are currently being held out there to conduct global trade, because all of the assets and instruments in the world at this moment are valued in terms of dollars. So everybody needs to hold dollars. So if the world says we are not going to accept dollars for oil or for lumber or for anything else that we want to import, that means that we will have a whole rash of dollars that are currently out there in the system as a tsunami back on our shores. There is your hyperinflation. But what that would also do is create, my goodness, a global liquidity crisis. And that, my friends, is the opportunity that the IMF will use, in my opinion, to come in and do the final conversion. But understand, when I say air SDRs, this is what I'm referring to. They are conjured out of thin air in an unlimited amount with virtually no cost, because how much does it cost to push a button? And they are OSDRs. If you haven't watched the webinar on the SDR, go and watch it. But the official SDRs are allocated, they're given. The MSDRs, which China's bringing out, those you would have to buy, but that's another story. But the OSDRs, they're given. So all the IMF really needs to do to complete this transition is to just create enough of them to buy the entire global financial system. Done and done. So, just to summarize what we just looked at, that the way that they keep most wealth in the system is to manage public perception. A rising stock market, which is what people look at, oh, my 401k is okay, everything must be fine, just creates complacency so that you keep most of your wealth in there. In addition, the final wealth transfer scheme is already in place. Either they have transferred the risk and they've created the laws. So that means that any wealth that is held in the system is at risk because all of that risk has been transferred to you. And then finally, all they really need to do, because make no mistake, the power has already shifted to the IMF. So this is not something I'm waiting for either. It's already happened. Now, according to Jim Rickards, April 21st is a trigger day. And the reason why he said that is because on that day, the IMF and the World Bank meets. Will they announce at that time that they will be replacing the dollar in global trade? I don't really know, but we'll know when we get there. But Jim thinks it's a significant meeting. He is definitely more of an insider than I am. So we'll just keep paying attention to that, and I'll keep you posted. But really, I want you to stop and think about this and look at what I'm about to show you. Because those that understand money own gold. So let's look at what the central banks and the ultra-wealthy do for themselves. This is the general central bank sales and purchases, and you can see central banks are buying like crazy. This is the IMF as the third largest holder of gold behind the US and Germany. Because the reality is he or she who holds the gold retains the power. So can you see how we do know that two of the largest, and Russia's in there as well, but two of the largest accumulators of gold are China and India. So, can you see how they have grown in prominence, in power at the IMF? Because gold is money. And anybody that knows money knows that. But what about the ultra wealthy, those that get to write the rules? Well, these are ultra rarities. And a lot of these coins can go for hundreds and hundreds of thousands and even millions of dollars for 1 ounce of gold. But this is for a function of growth because of eminent domain laws. Should they do a confiscation in this country, these are typically exempt. So physical gold in any form is really a very, very private way to hold a lot of wealth in a small movable package. Now, let me show you something else I think you're going to find really interesting, because those that understand gold own physical gold. They get what Wall Street is doing and the supply and the demand. Now, remember I said on October 1st, the Chinese yuan was entered in the SDR basket. On that day, gold was whacked 42 bucks. This is how they did it. Okay? It costs the central bankers and their minion roughly $27,000. That, mind you, all they have to do is push a button. They don't have to work for it. But 27 grand to control almost $3.2 billion worth of gold. That's a lot of leverage, and that's a lot of power. And that, my friends, is the truth. And here you go. Here's demand, and there's the spot. So Wall Street's spot price of gold. Does this make sense? No, none of this makes sense when you really look at it. It's illogical, and that's because it's an illusion. It's all an illusion. But wake up, because these illusions won't serve you well. And here at ITM Trading, we have a strategy, and it's based upon repeatable patterns and valuations. And it enables educated choices, supports current living standards, as well as future living standards and growth opportunities. Give us a call, talk to your precious metals consultant, and see how the strategy might fit with what you're trying to accomplish. And yes, the foundation of the strategy is good money gold, because physical gold eliminates the government's ability or the banker's ability to inflate your wealth away. It runs no counterparty risk. Every contract, all of those fiat products, stocks, bonds, mutual funds, annuities, all that stuff, those are all contracts, which means they are all counterparty risk. Gold runs no counterparty risk. You hold it, you own it outright. It is absolutely the ultimate hedge. Back in 33, this is what happened when they reset, as they took the gold away from the population. This is how it protected those in the know that got to keep their gold from what they were doing to the dollar. And this is how gold behaved during that transition from an oil, from a gold dollar standard to an oil debt dollar standard. 37, whatever that says, 37 bucks to 843 intraday. That is how gold behaves during a reset. Today, the value of gold that they've manipulated down is severely undervalued. Minimum, according to Jim Rickards, and I concur, is $10,000, and the range at the moment is $10,000 to $50,000. But what you really need to understand is that that's just at the moment. The more debt that they grow, the more leverage that they take on, the higher this number will go. We don't know what that number is going to be until it gets there, but the other thing we don't know is how much of the fiat money that they've already created they're going to need to cover, but this would be a minimum. So gold is on sale, and you saw how they put it on sale. They are taking advantage of it, and frankly, in my opinion, you should too. I know I am. So that's it for today. We're here to be of service. Please, we've got all of the archives on the webinars we've done in the past. They're all open to anybody that wants to go and look at them. We also like us on Facebook and on YouTube and subscribe. We're also doing, for those that don't know this yet, we do a Flash in 5 at Wednesdays at 1:15 Pacific Standard Time and 9:15 Pacific Standard Time. So thank you for coming. It's been a lot of fun for me today. You have a great day and be safe out there. Bye.